Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and we welcome back to the show John Newell, who's a portfolio manager at Fieldhouse Capital Management. How are you today, John?
I'm super good. Thank you for having me again, Karem.
I want to start by talking about the beginning of the gold bull market back in 2001. You were telling me before the interview about how the bull market started in 2001, resumed in 2016, and is still intact today. So in your experience, is this the typical behavior of a long bull market to try and shake off as many participants as possible before it continues?
Yeah, well, if you go back to 2001, you kind of, in 1999, 2001, gold was trying to break out above, 325. And eventually, in 2003, it did that and ran up to $1,000 and consolidated for a couple of years and then broke out of $1,000 and ran up to the all-time high of 1920 or so. And then we've had this long sort of 6-8 year waterfall down, and then this long base at that had trouble getting over 1370. And the way I like to describe it, and Frank Jusra in the interview with Colin described the Dow Jones as going sideways for 16 years, had been written off for dead, and in 1982 broke 1,000 for the first time ever, and went. And essentially, I describe it like a plane, a jet going through the sound barrier. You have trouble getting through that 1,000, but when you do, you break the sound barrier, there's a bang, and then the hush of no resistance because it's never been there before. And so if you go back to what we were talking about in the last interview, but that 1370 resistance, now that you've broken through it, there's very little between here and 16 or 1700. And so that's really opened up possibilities of all kinds of, earnings increases and deposits coming into, being viable again at higher gold prices. So that's been an important point. But if you look at a stock, like Microsoft, on its way from its 1992 lows, many times in its journey, it got hit by 40 or 50% along the way. And so if someone had the fortitude to go through it all, he was richly rewarded. And that's what I've really been trying to say with precious metal shares, not necessarily as a group, but individual companies and management teams and properties have been doing some of them have been doing pretty well. And it's to find them and ferret those out is what is the responsibility of a portfolio manager.
In our previous interview, you did mention certain companies that you considered renovation stories, but you're also interested in some exploration stocks. So will you continue to be invested in both types of mining companies for the rest of this bull market? Or will there come a point, John, where real speculation enters further down the road and exploration stocks all get pushed far higher simply on momentum, like perhaps in the gold and silver bull market of the late 70s? Is there a strategy in your mind on how to play this?
Yeah, well, if you go back to the late 70s, gold ran up from basically $35 to almost $200 and then corrected 50%. The damage to investors at that time in the mid 70s on that correction from 200 to 100. I'm just rounding those numbers off. That's where all the damage was. That's where all the margin calls were, and that's what knocked a lot of people out. And then you had the break above 200 and the run to 800. So using that as an example, the stocks that, or the companies that I'm focusing on are first of all the ones that have demonstrated leadership, like Kirkland Lake on the production side, and Great Bear on the exploration side. But yeah, there are many other types of stories. If you look at Equinox Gold, they just did a 1-for-5 rollback, but so that stock was trading at $1 at the beginning of this year. So that would be $5 rolled back, hit its first target of $8. And those are guys that just believe that they can take existing assets and use their geological expertise, geophysical expertise, and well-funded by guys that have done it before. And in this case, Mr. Ross Beatty, and build a 1 million ounce producer. So there are those types of stories, and Frank Juster's Leah Gold is sort of doing this, is trying to do the same thing. And so those stories, I think, are just getting started if in fact we're going to get the fuel to move these companies with higher gold prices. So in the exploration stories, in a world that, needs copper and silver and zinc and gold, as Doug Casey says, exploration stories become, I think, very important. But what I look for in those exploration stories are, first of all, really good management, guys that are really committed to the story, and not necessarily ones that have a long list of successes, but real dedicated people. And you can see it in Sun Metals taking over Lorraine Copper, seeing what they like, advancing the Sun Metals story from a participation ownership to 100% ownership in basically what amounted to less than a year. Crystal Lake is doing the same thing in the Golden Triangle. They've taken over Romeo's property that they were not advancing, and they thought they could do it a better way, and they got a tremendous management team in there to look at a large land position in the Eskay Rift and along the McClinlock Fault, and they're just going after it. So, I mean, you want to look for companies that are really trying to advance a story. And there are hiccups along the way, and I use an example of Rainy River. Rainy River started at $2 or at 25 cents. They did a financing at $5, went to $7, and then went to 80 cents in the 2008 market decline. They had 80 cents in cash, and they were trading at 80 cents. The stock regrouped, recalibrated, both fundamentally and technically, and then went on to hit $11.65 and exceeded it to $13. So, you know, if it's a committed management team and they've got a property and they put their head down and they're doing it, sometimes it's pretty painful, the corrections, but they can be richly rewarding also. So, yeah, I'm definitely considering or looking at exploration stories on a regular basis, and also new companies that are, geographically located near existing mines, and those where those mines are where you have the potential of finding, new resources. And remember, investors might forget, I don't, because I look at this a lot, but Great Bear was 72 cents, went to 2 cents, was recapitalized at 15 cents. No one had ever heard of it. There was no gold on that side of the highway. Big companies had already drilled it and written it off as barren. And then a geological team comes in, knows the area, looks at it a different way, thinks there's something there, goes through the data, spends, a lot of time going through the data, and then the stock starts its run when they start to find a bit of joy in the drill bit. And lots of people, didn't believe at 55 cents or $1.80 that Great Bear was much of a play, and now it's exceeded almost all of the targets that we've outlined in our charting. So I don't rule out exploration plays. There's just some tremendous geologists out there doing fantastic work.
Excellent. Okay, I'm always very interested in understanding how to sell at the end of a bull market. So with all bull markets, there's generally a blow-off top of some kind. So do you expect this, John, for the gold and silver sector? And what indicators will you look for to help you from staying too long at the party? We've all heard stories of taxi drivers giving stock tips near the top of a bull market, or people quitting their day jobs to trade full-time like in the dot-com boom. So how will you sell at the top? Do you have a strategy for this?
That's a work in progress. I'm not the best seller, but I can tell you just from my charting work, Garibaldi and Novo Resources were two stocks that I really did chart quite successfully to their highs, and when they failed to make new highs, and their charts failed, I absolutely said that there was a failure. But like Rainy River, those charts, both of them, Novo and Garibaldi, appeared to be setting up for another run, much like Rainy River did. So back in 2009, 2010. So to answer your question specifically, it's true when everybody's in it, and they're talking about it in on the front pages of Barron's and Business Week. Then probably that contrarian side of me would start to kick in, and when everybody's on one side of the boat, I tend to want to be on the other side, and that's just a natural tendency I guess I picked up over the years.
Let's move on and talk about some of your favorite books and authors, John. I know you're an avid reader, and it'd be interesting to know what books have shaped you as a contrarian investor over the years.
Okay, well, yeah. When I grew up in New England, so I was familiar with the Robert Frost. He was a famous poet and did the Road Less Traveled. And so people from New England are kind of naturally contrarian. And one of the natural contrarians was Humphrey Neill. He wrote a book, The Art of Contrary Investing. So that's a book that was one of the first books I ever read about investing. It's an older book, but I think one of your guests, David Hunter, recommended David Dreaman, and I'm a big fan of his. I have all his books. He was a Canadian that was transplanted to New York and a very famous contrarian portfolio manager and very, very successful. And he would be at the top of my list for investors that I admire. Gerald Loeb, The Battle for Investment Survival is a must-read for all investors, in my opinion. And for technicals, a good starter book. I like the elves on Louis Rukeyser's Wall Street Week. So Marty Zweig and Stan Weisenstein were books that I read early. And Jaime mentioned the Ferdinand Lips book, The War on Gold, or The Gold Wars by Ferdinand Lips. I actually helped bring Ferdinand Lips to Vancouver, and I bought 500 of his books for every member of the audience in 2004. I liked the book so much, so that would be The Gold Wars. And the book that actually helped kick it off was written in the late 70s, The War on Gold by Anthony Sutton. And if you read it today, it's almost like you're transported in time from then till now. It reads pretty much the same as what's been going on for the last few years. So, yeah, those are two books on gold that I really like.
As we begin to wrap up, John, is there anything else you wish to discuss today? Anything else on your mind to do with the markets?
I think that the only other thing is that it looks like the news events surrounding 1994 to 1988 are kind of resurfacing in today's politics, and so in that period of time, in that sideways period of time, 1985 to 1988, you had the gold shares go sideways for those 3 years and then went up 100. The gold indexes went up 185%. And so I don't rule that out as a possibility right now as a pretty monumental move ahead of us. And I feel like it feels like because I'm surrounded by people that like precious metals, that it feels like a crowded trade, but then I don't believe that hardly anyone is really looking at this space. So when everyone does, the moves like we saw in 2016 can be explosive. And if you look at some of the stocks, like McEwen Mining, when the last time gold was 1,500, McEwen Mining was 3 times the price. And I'm not saying that is a direct correlation, but there are many, many gold companies that are way behind the gold price right now. So I think there's a lot of catch-up in this market if you are a rifleman and can pick and do your due diligence on individual stories. And it's really shown up in one, like an Equinox Gold. So, and others, Leah Gold too. So I'm pretty bullish.
Okay, well, thank you once again for your time today, John. Much appreciated, and we'll have you back on the show later in the year, I'm sure.
Okay, have a great day.
think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?